3 secrets to why current gold prices are undervalued. What's up, you guys? It's Ocean here. Thank you for watching Silver Oceans. I have 3 great secrets to cover today, and I'm willing to bet even experienced precious metal stackers will be blown away by these 3 secrets. We're not going to waste any time, so let's dive right in. The first reason gold is currently undervalued is the books are cooked on CPI. Yeah, CPI is a consumer price lie, and I'll tell you why. CPI used to track a fixed standard of living using a basket of the same items year over year. This gets good. I'll tell you the short version of the CPI story. Be sure to stick around. The next 2 secrets are equally as important, and I have some great info on Nevada King at the end. About 30 years ago, US politicians figured out the country couldn't afford to continue paying cost of living increases for Social Security. Going against senior citizens is political suicide, and to continue the Social Security program and cost of living adjustments that go along with it, the US had to find a way to understate inflation. CPI became no longer based on a fixed basket of goods, but now a variable basket of goods, allowing for substitutions. For example, substituting a more expensive steak for a less expensive hamburger. So I'm not saying it makes sense, it really doesn't add up because the cost of living adjustment was made to no longer maintain a consistent level of satisfaction, but that's what happened. By the way, the Fed called it correcting CPI when in reality they destroyed the definition that was in place since the 18th century to suit their goals. This is why you hear people say whatever the government reports inflation at, double it. That's been roughly an accurate statement when you compare CPI to the old CPI standard over the last 20 years. However, the gap is widening, and from what I'm seeing, 2021 is a turning point to not just double reported CPI to find the real number, but multiply it by 2.5. For this year, this means 6.2% inflation multiplied by 2.5 leaves us with 15.5% inflation. Hey, I tell it like it is, and this is what I see. And take a second to ensure you've smashed the like button. The books are cooked on inflation, creating an even more bullish case for gold. We have great info on Nevada King coming up, but first, secret number 2 is on nominal versus real inflation rates. And this is the most important factor in the physical bullion market right now. The Fed is currently waiting for maximum employment to be met to increase the taper, then once the taper is level, rates will rise. The problem with waiting too long to raise rates is in the meantime, big businesses are able to take out loans for virtually nothing. So there's no productive motivation behind that money, and an unproductive economy is perpetuated. Nominal interest rates are virtually nothing, but when you adjust for inflation, real interest rates are currently negative. Even with Jerome Powell calling an alligator a lizard, precious metals haven't yet responded like they will, but it's not going to last much longer. To put the second secret plainly, we've seen year-over-year nominal inflation at 6.2% recently. The subtext savvy investors know is it's now safe to say real inflation rates are negative. So we've been provided real evidence of a bullish case for precious metals. That's why despite the recent modest rise in gold and silver spot prices, I'm still buying, and it's not too late. Spot prices merely increased because investors who are not traditionally stackers are entering the precious metal space. And this is because the metals have been de-risked, the metals have a clear path to increased upside potential, and the news has positively affected investor sentiment. The Fed Chair's recent press conference covered in my last video pushes Wall Street for one last bullish push before the crash. Savvy investors buy diversified equities when there's blood in the streets and buy precious metals in good times, and we're at the peak of the diversified equities bull market. The future of gold production has recently been called into question, and experience never takes a back seat. This Kitco article predicts a decrease in gold production after 2024. So a case is being made, but one unique niche within the stock market benefits from the looming crash catalyzed by overall overvaluation. Stick around for secret number 3, because continued inflation is not priced into current precious metals prices. When it comes to gold miners, you guys know I zero in on the management team. Now, past results don't guarantee future performance, but it's a great indicator for inductive reasoning. You guys know I can be very critical, but along with quality management indicators are examples of specific evidence that lead me to deduce there is a strong case for Nevada King. Thank you to Nevada King for sponsoring this video. The US stock ticker is VKMTF and the Canadian ticker is NKG. The company brings along the founders, management team, and strategy from the wildly successful Newfound Gold. Paul Matisik, Colin Cattell, Quentin Henney, and Doug Forster are leading this team. Paul Matisik was the chairman of Lithium X Energy when it was sold for $265 million cash, which was its peak price after a 500% run-up. All around, very highly experienced team here. The 4 people I mentioned account for over 100 years of combined mining experience. CEO Colin Cattell brought over the same strategy he used when he founded Newfound Gold. Large land packages with proven gold and massive drilling budgets. Because if you know the gold is in the ground but can't afford to mine it, what's the point? Newfound Gold has a market cap 20 times that of Nevada King, and the difference is they already hit a motherlode. I want you to do your own research. My research shows me that Nevada King is undervalued, and I purchased 150 shares for myself. It's a junior miner, so there's huge potential upside, and I picked up shares for around 31 cents each. What's particularly interesting about Nevada King is they've staked 7,000 claims in Battle Mountain, Nevada. They got in years ago in a bear market, but now their work is paying off. If any senior miners want to diversify their exploration in this area, they will be virtually forced to go through Nevada King. And because Nevada King acquired 98% of the land through staking, which requires actually staking poles in the ground, they legally do not owe royalties to those 98% of past producers. The state of Nevada accounts for 71% of US gold production, and if it was its own country, it would be the 4th largest gold producer. Nevada King is growing fast. It's currently the state's 4th largest active claim holder, with a plan to become the 2nd largest by the end of 2022. And gold in the state of Nevada generally isn't very deep, so that helps Nevada King's $20 million cash for drilling to stretch even further. So check out Nevada King and let me know what you think. The third secret to currently undervalued gold is continued inflation is not priced in to current precious metals prices. Stackers know holding gold and silver puts you in a much better position than holding US dollars or the fiat of your country. Even with the recent run-up in spot price, I know it may seem like precious metals are rising slower than a Sunday afternoon, but be persistent. We're looking at events, news is breaking, and it's in the stackers' favor. The US debt clock is past the point of no return. Tens of trillions of dollars are impossible to pay back, and the Fed is assisted with the advancement on the Great Reset topic. When that day comes, precious metals will continue to act as a store of value, even if most people are agreeable to the new system. Which secret to undervalued gold stood out to you? Be sure to let me know in the comments of this video. And I broke down the Fed's recent press conference in this video. So if you haven't seen it yet, be sure to check it out now. Hey, you guys are incredible. Thank you for watching to the very end. Stack wide as the ocean.